This video is sponsored by Abacus AI, the European capital market. Actually, scratch that. We don't have a European capital market. We've got 27 national ones. And every day, trillions of euros flow right through them. Stocks, bonds, derivatives, you name it. But unless you're a finance bro, that probably doesn't mean much to you. And you're not alone. Most people have no idea how capital markets actually work, or why they matter. Yet they have a massive impact on our lives. Now the EU says it's time to change the system. It's pushing for a capital markets union, a big bold plan to fix what is broken. They claim it will help consumers like you and me and make it easier for businesses, especially startups, to raise money and ultimately boost Europe's economic competitiveness. Sounds great, right? But how and why now? In this video, we'll break it all down. So, we sat down with Kathryn Carlson, a finance reporter at POLITICO Europe, and asked her, what actually is the Capital Markets Union?
The single market is something that we all know about, whether it's for shopping for specific products, whether it's for using the same currency. The idea is just that you have this one big market between 27 countries. And the idea of the Capital Markets Union, it's a little bit the same, but for investment. So the idea is you have people's money and companies' money that's flowing around in a big single pot across the EU.
But to truly understand what the Capital Market Union is trying to fix, we first need to look at how things work today for both businesses and consumers. But before that, a very quick word from our sponsor. Which large language model do you actually use today? ChatGPT? Super strong, especially when it comes to reasoning and general conversation. DeepSeek? Also a great one, especially for coding and research-heavy tasks. Or maybe Gemini? Also cool, especially for tasks that require real-world context for visual reasoning. But here's the thing, each of these tools has its own strengths. So if you want the best results, you normally have to keep switching in between them. Well, not anymore. Our sponsor today, chatllm.abacus.ai, brings all the top AI models together in one single platform. It automatically chooses the best model based on your prompt. You don't have to think about it. You get access to ChatGPT, Claude, Gemini, DeepSeek, Grok 3, and more. And it's not just text. You can generate images and videos too, using models like DALL-E, Recraft, Runway, Luma, and more, all built in. They even have a humanize feature that helps bypass AI detectors and makes AI-generated text sound more human. And the best part? It's all just $10 per month, way cheaper than paying for each tool separately. So visit chatllm.abacus.ai or click the link in the description or in the pinned comment below. Back to the video. Now imagine you've just launched a startup in Romania. You've got the idea, the team, the drive, but not the funding. And that's a major hurdle. So unless the founders have rich parents, very generous friends, or just won the lottery, there are basically only 3 ways to raise money. First, borrow from a bank. But banks tend to play it very safe. If your business is new, unproven, or even just a little risky, chances are they'll say no, or charge you sky-high interest rates. Second, venture capital. This is private investment from people or funds willing to bet on high-growth startups. Sounds great, right? But if you are a Romanian startup, you're probably only pitching to Romanian investors. Because most venture capital tends to stay within national borders. Why? Because Europe's capital markets are fragmented. Different rules, different tax systems, different legal frameworks. A German investor might love the Romanian idea, but still hesitate because cross-border investing is complex and risky. So in practice, you're often stuck raising money at home.
I mean, for instance, one of the types of laws that are holding back a single rulebook in the EU, which would make investment flows a lot easier, is things like the national laws for what happens when a company fails, which is insolvency. And if you look at the French insolvency laws, they go back to Napoleon.
In the US, it's a very different story. Startups can easily raise money anywhere because the same laws, currency, and financial rules apply across all states. Third, we have the stock market, mainly for larger scale-ups. But the Bucharest Stock Exchange is small, so attracting investors from wealthier countries, like Germany or France, is tough.
The problem at the moment is that you don't really have one big European stock market. You have lots of smaller national stock markets.
Before Brexit, many companies went to the London Stock Exchange. It offered visibility and access to capital. But now cities like Paris, Frankfurt, and Amsterdam are trying to take the lead, competing with each other rather than working together. Meanwhile, the US has only a few major stock exchanges. The New York Stock Exchange and the Nasdaq, for example, are part of a single unified capital market. And many promising European startups don't wait around and simply leave for the US.
Which is what's happened with some big EU businesses like Birkenstock. Birkenstock was a really notorious one. They decided to go public in the US, and it was a big embarrassment for Germany because they just don't have access to the same big pools of money in the EU that they do in the US.
Over the past decade, 130 European companies have shifted their primary stock market listings to the US. They did this through IPOs, mergers with US firms, or by switching from European exchanges. At the time of their move, these companies were valued at almost $700 billion. The result? Profitable European companies with dozens of skilled and innovative employees, often trained through Europe's social programs, end up generating wealth for the US instead. Not ideal. So how is the Capital Markets Union going to fix this? The exact legislation proposals are still being finalized and expected later this year. But a recent European Central Bank report gives us a good idea of what's coming. For bank loans, the CMU wants to boost something called securitization. This means bank bundle loans, including riskier ones, into financial products called securities and sell them to investors. This helps banks free up capital so they can lend more, especially to new and riskier startups. For venture capital, the CMU is working towards harmonizing laws across member states, including insolvency regulations. This gives investors greater uncertainty and better protection for their investments. It's also pushing for more cross-border investment by promoting Europe-wide venture funds. And when it comes to the stock market, the CMU plans several changes. Creating a single platform where investors can easily access all stock prices and trading information across the EU. Making trading rules the same across the European Union so that markets work together and not against each other. And simplifying IPO and listing rules and cutting red tape for small and medium companies going public. And one of our favorite ideas that could help all companies is the 28th tax regime. Think of it as a 28th entity alongside the 27 member states. A unified system with one set of laws and a single tax code for investors and companies across the EU. It's a pretty original approach and much easier than trying to harmonize the 27 different systems. But the Capital Markets Union isn't just for businesses. It's also meant to benefit people like you and me. Right now, only 34% of EU citizens invest in the stock market, and even fewer invest in European stocks. That's very low compared to the US, where around 62% of Americans own stocks, mostly through retirement plans. In Europe today, nearly a third of household wealth in the EU is just sitting in low-interest bank accounts. But why?
I mean, for starters, the culture doesn't really exist here. If you look at why people invest, a lot of it comes out of cultural reasons that are very different.
In the US, people know that they need to save and invest to secure their retirement. In much of Europe, the mindset is different. I'll have a state pension. The government's got me covered. Another reason is access. Countries like France, Sweden, the Netherlands, and Denmark offer simple, low-free saving programs with good tax benefits that encourage long-term investing. In contrast, Germany's Riester pension has complex rules and low guaranteed returns, which limits its appeal. And the result is that trillions of euros that could be funding startups or driving innovation are just sitting idle. The Capital Markets Union aims to change this by offering Europeans better investment options, higher returns, and easier market access. It also aims to offer smart tax benefits to encourage people to save and invest for the long term. One of the big EU projects is the Pan-European Personal Pension Product, or PEP in short. It's a flexible pension plan designed to be portable across the entire EU. No matter if you move countries, you keep saving for retirement without hassle. So, what next? The Capital Markets Union has been on the EU agenda for a decade. So will anything change?
Politically, it's quite a difficult sell because it's this complicated thing. People don't really understand how it works. It's difficult to see the benefits of it. And it requires a lot of technical changes everywhere to make even incremental progress. And even that progress takes a long time.
And that's one of the main reasons the EU has recently rebranded the Capital Markets Union as the Savings and Investment Union. Something that sounds clearer, more relatable, and more relevant to everyday life. But a name change isn't enough.
It's a tough sell. It takes a lot of compromise. And ultimately, it requires countries to sort of decide to go into it together and put their national interests on hold for a second so that the EU can make progress together.
And that's the real challenge, getting 27 governments to align on deep financial reform, not for immediate political gain, but for long-term collective benefit. Nonetheless, in the next few months, the Commission will publish a blueprint for EU-wide saving and investment products and launch a financial literacy strategy to build a more investment-minded culture here in Europe. And later this year, we're expecting a major legislative package on market integration. In short, the legal groundwork is being laid now, and the real test will come in late 2025. That's when we'll see whether the EU can finally turn 10 years of talk into action. Thank you so much for watching. Make sure to leave a like and subscribe for more content. And to support us further, consider joining us on Patreon and vote on video ideas every week. And thank you so much to our presidents, Jan, Schauke, Christian, Peter, HEVD, Daniel, Unite Europe, Stefan, and Mr. Probot. See you in the next video.